The final lesson in chapter 3 takes a quick look at taxes. And we are going to really kind of shortchange this and just look at the basic calculation of how just the basic calculation of taxes. So most employers do a withholding, meaning they automatically take taxes out of your paycheck and send that to the government. And that's based on what you filled out, how much to take out. And then at the end of the year, like what's coming up, April 15th, you fill out your tax stuff and determine, did you pay enough for your taxes or did you overpay? And if you overpaid, you get a refund. So in the US, we have what's called tax brackets to determine how much taxes you owe. And this is an old version of what the tax rate was based on these tax brackets. So if you were a single person that made up to $9,075, you would pay 10% of that to the government. That's how much you would owe. And then if you were married, filed jointly, or a widower, you would owe 10% of $18,150, and then the scale goes up to 39.6%. What this assumes is taxable income. So there's all kinds of loopholes and tax things that you can do to reduce your taxable income. For example, if you deposit money in an IRA, like some sort of retirement account, that can reduce your taxable income. If you have children, you can get tax credits. People in the real estate industry get all kinds of advantages and stuff like that. So we're going to ignore all of those things and just look at, assuming we've done all of our tax deductions, all of that out, how would we calculate the taxes on our taxable income? So let's look at question 1. It says, if a person filing as a single has taxable income of $42,000, what tax bracket is she in? Well, we'd look at this $42,000 and we'd go look at the maximums and say, where is $42,000 within that? So it's larger than $36,900, but it's less than $89,350. So this is their tax bracket. Since they're single, they would owe 25% of that $42,000. But wait, no, that's not actually what they'd owe. They would owe on this scale. So part of that $42,000 would be taxed at 10%, part at 15%, and part at 25%. If this person had been married and filed jointly, they would be in a lower tax bracket, 15%. So let's calculate how much this person would owe. We're going to go with the assumption that they're single and the taxable income is $42,000. So if you look at this bracket, the first $9,075 gets taxed at the 10% rate. So we're going to take 10% of that $9,000, and this is how much we'd have to give the government for that first set of money. Now, when we get to this bracket, the next set of money, we have to get taxed at 15%. So how much of this $36,900 was going to be taxed at 15%? Well, it's the difference of these two numbers. So we would take 36,900, subtract from it the $9,075 that have already been taxed at the 10% rate, and we'll tax this new amount at the 15% rate. And we'll do the same strategy for the next bracket. Since our 42,000 falls within these values, 42,000 is the maximum amount that this person made. We're going to subtract from that 42,000 the 36,900 to see how much over this amount is going to get taxed at the 25% tax bracket. So all we have to do is run these calculations, and this time I think I'll switch and do it in Desmos real fast. Oh, there is my email, and there's my eBay, and there's Facebook again. Let's go to Desmos. Well, let's type it in correctly. How about that? So here we go. I'm just going to type in the 36,900 minus 9075 and put parentheses around that. Note that's $27,825, and we're going to multiply that by 15% or 0.15. we would owe the government $4,173.75. We're going to do the same thing for the next one. We're typing the 42,000, subtract the 36,900. I'll put parentheses. This gets taxed at the 25% rate. So we owe $1,275 on that. And then we're just going to add together those three amounts. So the amount we owed for the 10% was $907.50. And then for the 15%, $4,173.75. And finally, for the 25%, we owe $1,275. This is how much money we owe the government. Well, this individual would owe. Quick note here: government doesn't. When you do your taxes, they round to the nearest whole number, so these cents wouldn't matter. But I'm going to leave it in here as the cents. So here's those three numbers we calculated. Here is the total tax liabilities, often how it's called. We'll say taxes owed. I really like question 3 here. If we had just assumed that we owed 25% of our entire income, how much would this individual have overpaid? So to calculate that, we just do 0.25 times 42,000 and see what is that number. And that is $10,500. We would have overpaid by almost $4,000, actually over $4,000. So that's what's kind of nice about this progressive tax bracket is people that make less money get taxed at a lower rate.